Think about it. March 2020, when there was a big lockdown, crypto markets dropped, US markets dropped, Philippine stocks dropped. Why? Because at the height of fear is also the height of opportunity. At the height of when everything's scary, that will give you the largest ability to have upside also later on. But in the midst of all of that, when everything seems so scary, it's your conviction to be able to execute at that point, at that time, that will cause you also to reap the benefits later. Hey guys, so we're seeing the market correct once again, and it's not just also the crypto markets, we're seeing it also happen in the stock market. So I want to create this video to address the current drops, and I want to share tips and principles to all of you while we're going through this drop. And please do notice, and I've been saying this over and over, that drops like this, they don't end it. When I say they don't end, they're cyclical. It goes up, it goes down, it goes up, it goes down. We've seen that over and over, regardless of market. If it's Philippine stocks, US stocks, the crypto market, there will be pumps and there will be dumps, and you have to be used to it, because that's the name of the game. Every time you enter into an asset class that has volatility, every time you enter an asset class that has no fixed set of returns. Why am I saying this? Similar to what I said a few days ago when the market was going up, it's just the same banana, it's just the same technique, that if what will kill you when the market is up is your emotions, what will kill you also when the market is down is also your emotions as well. So if you need to take a pause, you need to also take the time to detach yourself and not look at the screen, not touch your phone, or not look at your laptop, so that you don't get emotional. And please do note this, being emotional is not just you selling at a loss, it could be also selling earlier into a profit. And I've been saying this over and over, that one of the biggest mistakes that I've had in the market, selling something too early only to see it start to go up even more. And I'll say this over and over, that it's so important that when you are investing, it's so important that when you're trading, is to set areas where you want to sell. It could be determined by percentages that you will sell based on this percentage. It could be determined by technical analysis that once it hits a level of resistance, you will already take profits. Or it could be based on a level of valuations that when it becomes expensive, regardless if you're looking at it from a market cap perspective, or if you're investing in the stock market, you're looking at it from a PE ratio perspective, regardless of what your mechanism is to be able to determine if that crypto or that stock is expensive, or from a technical aspect, if those sell signals start to emerge, regardless of what your technique is, if those signals are not hit yet, then you're not supposed to do anything. You need to deploy patience. You need to not to log in. You need not to touch your phone. The money in investing is not in the number of times you monitor. It's not in the number of times that you refresh your phone. It's in sticking to what your plan actually is. That's why I've been saying this over and over. Spend a lot of time, if it's crypto or stocks, knowing more about the project or the company that you are investing into, because that will give you conviction. At the end of it all, when you know what you're investing into, and everyone else is panicking, but you know what you've gotten yourself into, you will be relaxed, you will be composed, you will be the one buying because you found something that's really, really good at a time where people are actually selling and actually panicking. But that will only happen if you have full conviction in what you're getting into. In the same way also for technical analysis, and if you're actually also trading, that's where you sticking to your plan in terms of what technical indicators you're using. Some people use Bollinger Bands, some people use MACD, some people use a combination between MACD and moving averages, some people just really draw their support and resistance and its relationship to certain candlesticks. That's fine also. What's important is before you make the trade, before you make the buy, the rules are already set. Before you make the trade, before you make the buy, you already know at what price you want to buy it. But before you even transact and you actually do it, you already set an area where you want to take profits or cut loss and sell before all of those buying is actually done. And that's so important, that's so significant, because if you make the trade without setting the rules, it will be easy to flip-flop. What will kill you is not just the lack of knowledge. What will kill you is when emotions are tugging already and pushing you already to make a decision, especially when there will be large market swings, either upward or downward. And in this case, it's just that it's really red, and it could be a combination of a lot of things. By the time I'm making this video, there's a lot of people making predictions that the US will enter a recession next year. There's a lot of people that looking at the yield curve. When there's an inversion of the yield curve, it will lead for crashes in the market. There's a lot of predictions. Either you follow those predictions, you do your research, and if you find merit off of it, and if it's something that's worth selling based on the merits off of those predictions, then by all means do it. But the worst thing that you could ever do is to transact just because everyone is doing it, just because everyone is saying it, but you don't have your own firm conviction and opinion. Especially for stocks that are amazing, especially for crypto projects that are really, really good. Their fundamentals don't change overnight. Their fundamentals don't change every 15 minutes. Their fundamentals don't change every hour. Whatever's slated for that particular company, whatever's slated for that particular project, if they're building, if they're moving, if they're increasing, if they're just continually developing, then whatever you see in a minute per minute basis should not actually matter. And whatever you see in a minute per minute basis should not be something that should actually scare you. That's why you need to have parameters. You need to have an anchor that you could look at. It could be something that you list in your notebook. It could be something that you could list in your laptop that you go back to every time there's volatility, because that will be your anchor. That will set you straight. That will give you the ability that, hey, in the midst of all of this volatility that's going on, this is what I'm looking at. As long as this is not telling me to sell, you hold. Or while you're looking at that, your parameters are telling you to buy in the midst of volatility, in the midst of what's scary, then that gives you the ability to actually stack and enter. But I'll say this over and over, that if you're a long-term investor, regardless if it's the stock market or regardless if it's cryptocurrencies, if you're buying something that has value, if you're buying something that has merit, if you're buying something that has the ability to be there in the next 5, 10, 15, 20 years, then it would be a very, very good proposition for you to stack them when there's a lot of people that are scared. Think about it. March 2020, when there was a big lockdown, crypto markets dropped, US markets dropped, Philippine stocks dropped. Why? Because at the height of fear is also the height of opportunity. At the height of when everything's scary, that will give you the largest ability to have upside also later on. But in the midst of all of that, when everything seems so scary, it's your conviction to be able to execute at that point, at that time, that will cause you also to reap the benefits later. It's easy to come in when everything is fruity. It's easy to come in when there's no more fear. It takes courage, it takes guts, it takes conviction, it takes a lot of studying, it takes having a long-term horizon to know what you're doing when everything's scary. And for certain projects that are amazing, that don't change so much, like Bitcoin, or like Ethereum, or like Apple, or like Amazon, or like Tesla, or like Ayala Corporation, as long as their long-term trajectory is intact, as long as the merits of why you bought them are still intact, then drops should not be a cause for you to be scared. There will always be something that will cause the markets to drop. There will always be something, a bearish news item that will cause you to actually sell. But you must go beyond that and stick and follow your plan. So I hope this helps you. I hope that this is something that's insightful to all of you, because I really feel that above and beyond just sharing technicals or fundamentals of certain projects, it's the psychology also of money. It's the psychology also of investing. It's me sharing to you how are you supposed to respond also emotionally when all of this is going on. But at the end of the day, I just want to end it with this. If your time horizon is very, very long, what happens in the next weeks, what happens in the next month really doesn't matter. And as I look back on what I did in 2007 and 2008, looking at it 15 years now, I don't even remember the specific dates when markets were crashing. Looking at it from this point in time, they're not as relevant anymore. What was important at that time was I was positioned. What was important at that time was I accumulated. What was important at that time was I built a base. What was important at that time was I knew that if I wanted to make it better for me over the long term, was that I needed to have a position that when the market goes up, I would have a larger base. That's why I kept saying it over and over and over. Building a base and building a volume off of that base is far more important than trying to pinpoint where's the lowest portion of the market, or trying to pinpoint or trying to be scared that, oh, I was not able to buy it lower, or when I bought it, it started to go down. Not really. Build a base, build volume, because at the end of it all, if your time horizon is long, if you know what you're doing, you have conviction, you know what you're getting into, building a large base will be one of the greatest things that you've ever done. So there, I hope that this was something that was insightful for you. I hope that this was something that was useful. At the end of the day, I'm gonna continually pump more videos for all of you, because I just really want you guys to succeed. I want more and more people to be able to do well. I want more and more people to be able to learn and decide and be able to have the right information when it comes to their investments. So that's it for now. This is Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.